let's talk about whether or not we are seeing this heightened volatility regime just start in the week before the election. Can we expect more of the same?
Yes, Dom, I think that this is going to continue. This volatility that we're seeing is being fed by a push and pull. Obviously, you have the push, which is that earnings actually for the tech stocks, which are coming this week, are expected to be quite good. We've already seen some very good numbers, and we'll probably continue to see that. We'll get a GDP print for Q3 on Thursday. That's expected to be very solid, 34% annualized growth. However, that doesn't tell the whole story. In fact, most of that recoup was actually in July, and August and September were already slowing. And so while that number probably can help push the market, what's pulling the market back is, as you said, rising COVID cases and the continuing drama of the election.
Gina, we've seen for the course of the past maybe 2 or 3 weeks, this trend higher in COVID cases. The record numbers were anticipated. Why is it now that we are seeing the kind of downside move that we saw yesterday? I mean, yes, earnings play a story. COVID plays a story. The election plays part of that story. But why yesterday? And can we really kind of look at that as a blueprint, if you will, for the next maybe week and a half or so?
Well, I think what's really pushing the markets and what's pushed and pulled the markets over the last week and a half, 2 weeks, has really been these stalled stimulus talks. I think that has really been the linchpin, that the markets need to see a stimulus plan of some sort. The idea that Congress may, fail to do this before the election, the likelihood that it actually gets passed during a lame duck session is very low. And so, we're looking at a situation where we can see that the numbers are already starting to slow. They've been slowing for the past 2 months, and they will probably continue to slow in the face of rising COVID cases. That could get even worse. So we need a plan, and we need it now.
The idea here is that the markets are still kind of near these record high levels. They're not that far away from it. This pullback here, has it gotten you excited about any part of the market? Is it here in the U.S.? Is it outside the U.S.? Is it a certain sector, certain stocks? What has you kind of stirring with regard to those animal spirits? What do you want to buy?
Well, right now it's challenging because we've seen this continued support for value stocks, and yet growth has continued to dominate for most of the pandemic. And if we get I think once we get past the election, I actually think that growth may reemerge, particularly if we get a Biden win. I think there's more sort of likelihood that the markets will take that as a positive for getting control over this virus sooner rather than later. And that means that you can look forward and you can start to discount a recovery sooner rather than later. We are just right now in a period during which some of these stocks may actually become reasonably, we're not going to call them cheap, but let's just say more affordable.
Is there something, Gina, I know that you're a macro person at heart. Is there anything out there in the Treasury or credit markets that has you at all worried? They seem to be relatively stable compared with other parts of the equity markets. Are bonds telling us anything?
Well, the bond markets, I think, if you look, for example, at debt, just the debt that corporations have taken on, I don't think that the credit markets are properly priced with regard to the risk that's baked in there. I think that if you don't get continued stimulus and you don't get continued support, there's actually more danger right now in the credit markets than there actually is in some of these over big equity numbers that we've seen.
All right. So
I would actually still take equity over credit.
Shepard Smith here. Thanks for watching CNBC on YouTube.